All right, so just going to go over all the setups that took place last week from 19th of June up until obviously the 23rd of June, Friday. Okay, so starting with Monday, we can see that just obviously prior to Monday, based on the close of last week Friday's candle, we'd seen 3 sessions of rise plus an extended run on Friday. And of course, for now, I've just delineated the next drawn buy side as obviously a line, but there are imbalances. So it's the bullish imbalance right there. And then, of course, we have another imbalance for the next draw on sell side. So it's pretty straightforward on the daily and going down to the 4 hour. So obviously, based on this, we can anticipate some sort of a bearish reversal to take place on the Monday. Now, going on to the 4 hour time frame. So what I'm just going to do is, okay, I'm just going to adjust these lines just to show you sort of what I anticipated or what we anticipated just before the open of the European session. So we can see the next drawn buy side on the 4 hour was this swing high, and the next drawn sell side on the 4 hour is this swing low down here. Now, going into the session, we go down to the 1 hour time frame. And again, I'm just going to forward play that once just before the European Open. Just a second. All right, so I'm just going to get some new lines in place. So that's EU, and this is London. There we go. So we can see that just before the European Open, right, on the 1 hour time frame, again, price had given this initial expansion to the downside. So the reversal had already started. We can see that the next drawn buy side was the swing high, and the next drawn sell side was the swing low down here. So bearish was the better direction on the 1 hour time frame. So if we go down to the 15 minutes time frame, again, we can just see the price just before. So I'm just going to get rid of these so I can show you exactly what I was seeing in real time. So obviously, initially, just before the session started, we can see the price had essentially delivered on a bullish break outside of the Asian range. So price given this close, and then the next candle didn't close back into the range. So this is a bullish break. So obviously, as we have a bullish break at AOI was for price to trade into this bullish order block responsible for the bullish break. But we also wanted to see price take out at least the BST or the SST on the 1 hour time frame. So again, just in European Open, we saw price trade into the order block as well as taking out the H1 SST to the downside. Now, again, what we're interested in is where price is just before the London Open. Now, what I anticipated in this case, because obviously price had traded right into the bullish order block, but if we also take a look on the 5 minutes time frame, we can see that price had given, or rather had delivered, a break of market structure on the 5 minutes time frame as well, right? So this is a break of market structure. So in this case, one could anticipate one of two things, because bearish is the better direction based on the 1 hour. There are two different setups that we could anticipate for a bearish continuation. The first is a 5 minute BRR. So we have a 5 minutes break of market structure. We can anticipate a retest of a high volume area and thereafter a bearish continuation to the downside. The second possibility to have anticipated is a BRC. So BRC is where, sorry, BR1. So BR1 is where price would trade back up to take out the recent high. And then after taking out the recent high, we anticipate a 1 minute confirmation to go short. But considering what we've seen is a break of market structure on a 5 minutes time frame, obviously the most reasonable move is to anticipate a break retest reversal. So the best setup that took place was obviously after price traded back up towards the high right there. Oops, sorry, just that went a bit too fast. Sorry, 1 second. Just waiting for that to slow down. There we go. So iron price traded all the way back up towards this high. Now, the two ways one could have engaged in this setup, because again, you with a BRR5, you can either enter on the 5 minutes time frame or you can enter on the 1 minute time frame. Now, the 5 minutes, of course, is good if you can get a good risk to reward. So let's imagine that your stop loss goes 5 pips above the recent high on the 5 minutes time frame, right? Then one could have actually taken a setup on the 5 minutes time frame when price traded right into this last up close candle or the recent high. That's why I went short. And then, of course, in terms of profit targets, first profit target is the recent low down here. And then the second profit target will be where the 800 EMA is positioned on the 5 minutes time frame. So it's two very good areas to aim for. So you could even have aimed for the daily SST, or obviously that daily imbalance that was residing below was also a good place to aim for. Now, the second way one could have entered this setup, let's imagine that you weren't focused on the 5 minutes, but you were focused on looking for a 1 minute confirmation, right? So you would have then needed to have waited for a 1 minute break of market structure to have taken place. So in this case, we can see the recent high. We can see that price obviously gave this swing low after creating this high. And therefore, obviously, this can be interpreted as a secondary break. So secondary break, obviously, we have an imbalance. So now with a 1 minute entry confirmation, right? Again, stop goes 5 pips above the high, right? You would have needed to have entered, gone short at the imbalance that was created, or you could have decided to have gone short sort of within the imbalance, but coinciding with a retest of this general area, this last up close candle, which is of course a high volume area. But let's imagine you took a classic textbook entry and you entered at the imbalance, stop going 5 pips above the high. Now, of course, you would not have been able to get a 1 to 2 to the recent low or to the low of the Asian range. So what I would have definitely recommended in this case would have been to have looked for the next area of high volume liquidity, which is this low. So personally, because you can't even get a 1 to 2 to these equal lows down here, for me, this would not have been a valid setup to have taken if you were deciding to have waited for that 1 minute entry confirmation. Unless, of course, you adjusted your entry. So rather than entering at the open of the imbalance, you adjusted your entry to a position within the imbalance that would have afforded you a 1 to 2 risk to reward ratio to obviously those lows, to these lows down here. That's residing just below the Asian range, okay? And then after that, you can then have aimed for your second profit target, which would have been, sorry, Control Z, a second profit target, which would have been at the 800 EMA on the 5 minutes time frame. So it would have been the same as what I mentioned just now. Would have been all the way down here. So that's a 1 to 6, which is not bad. So there's two different areas that you could have entered. You could have taken a 5 minute entry near the high, or you could have taken a 1 minute entry at the imbalance. But now the question is, did that 1 minute entry trigger? Well, let's take a look and see what happened, because obviously after price created an imbalance, price traded right back into the high volume area. It accumulated for a bit, but it didn't really quite trade all the way up here, leaving obviously this general area unmitigated. So obviously an entry attempt on the 1 minute time frame would probably not have triggered your pending order, because price wouldn't have traded all the way up here. But if you decided to just enter on a 5 minutes time frame near the last up close candle with a stop going 5 pips above the 5 minutes high, like I did, right, then you would have been able to get a very nice entry confirmation on this. And that's why it's important to sort of be focused on the 1 minute, 5 minutes, and as well as the 15 minutes simultaneously when you're looking for entry confirmations. So that was the setup that took place on Monday. And then obviously we saw a very nice run into the next trading day. Okay. Now let's take a look at Tuesday. So going into Tuesday, we've seen that Monday had given us a session of drop. So that's obviously now giving us that confirmation that we're now within that bearish reversal cycle. So going into the 4-hour time frame. So again, just before the European Open, we can see that price had obviously delivered an initial expansion to the downside on the 4-hour time frame. The next drawn buy side is the swing high, and the next drawn sell side is the swing low down here. We go down to the 1-hour time frame. Again, just a forward play that once. I'm just going to drag these two along. All right, we can see very clearly that price had delivered on 3 expansions to the downside and gave a bearish reversal into this order block. And now we've seen that price has given us an initial bearish expansion to the downside right there, contracted, and a secondary expansion to the downside. Now, of course, the next drawn buy side was this imbalance on the 1 hour, and the next drawn sell side is the swing low down here. Now, if we go down to the 15 minutes time frame, what we can see very clearly is that price has, before the open of the European session, price had given us a bearish break outside of the Asian range. Of course, this bearish order block is an area of interest, which I've highlighted. So we have a bearish break. Bearish is still the optimal direction to trade in. So therefore, one could have anticipated one of two different opportunities. You could have anticipated a BRC, right? Well, actually, a BRC is the only opportunity one could anticipate in line with a bearish bias. So London Open, we can see the price obviously traded into this H1 SST, took out the recent low, but then traded right back into that range. So again, we're still obviously looking for an opportunity to sell, okay? So on the 15 minutes, you can see price is taking out the high of the bearish order block, right? And at this point, what I'm looking for is a setup to go short. Now, the way the setup would have taken place, because we're looking for a 1-minute confirmation to sell, price obviously traded right into this high and then gave this initial move to the downside, making this a secondary break of market structure. So from that secondary break of market structure, took an entry opportunity at the imbalance. You could have entered at the imbalance. You could have entered at the last up close candle. Again, entirely depends on how much attention you're paying and how much you essentially want to get a good R to R. And then, of course, the first target is going to be the recent low below right there. And secondary targets would be, again, at 5 minutes, 800 EMA, which is optimal. So yeah, you can see that obviously 5 minutes, 800 EMA is down here, but what I usually do is I make that adjustment by looking for other areas that price could be looking to trade into, such as obviously we have this low down here, right? So this low is of course going to be a very key area of interest, which is the daily low. So what I'll do is secondary target for me in this case could also be within this general imbalance just below the daily time frame. So if we go down to the 1-minute time frame, we can see that obviously price would have triggered your entry opportunity, and then after triggering that entry opportunity, price did proceed to give a very nice sustained move to the downside. Okay, the very nice sustained move to the downside. Right, and you would have had both of your profit objectives have been met. So essentially, the ideal setup on this specific trading day was a break retest continuation, where price gave a bearish break outside the Asian range, retested the order block, took out the high of the order block, and then proceeded to give a bearish continuation to the downside. So let's take a look now on Wednesday. Going into Wednesday, we've seen 2 bearish sessions of drop. Obviously, our daily SST is going to be this daily imbalance that remains open, and our daily BST is going to be this swing high right here. Okay. Now going down to the 4-hour time frame, we can see very clearly that price had delivered on 2 bearish expansions to the downside. So just before the European Open, next drawn buy side is this initial high. Next drawn sell side is this initial low down here. We go down to the 1-hour time frame. So again, I'm just going to drag these 2 lines across. We can see that price had obviously given us 3 bearish expansions on a 1 hour. And now what we're looking at is a potential bullish reversal with a bullish expansion to the upside. Now, there's 2 things to be aware of on this trading day. We have UK core inflation And obviously we have the Fed news later today. So again, two red news of importance. If we go down to the 15 minutes time frame, we can see that this is our Asian range that has been created. So essentially on this day, we had a bullish break outside of the Asian range. Again, we could have anticipated a bearish continuation in line with the 4-hour bias, as well as, and also in line with the daily bias as well. So just before the London Open, what we saw was that price obviously traded aggressively into give us a break of market structure to the downside. So there's a very strong shift to the downside into the bearish order block. If we take a look on the 5 minutes time frame, for me, this is where I took my bias from, because we had a secondary break of market structure on the 5 minutes time frame. So obviously at AOI it was this imbalance, and then on the 15 minutes as well. Obviously at AOI could also be this last up close candle. So general idea was to wait for price to have traded into this general area of interest, and then to have taken a 1 minute confirmation short from there, in line with a 15 minutes and a 5 minutes PRR. So essentially what happened is we did see obviously price. 1 second, just give it a minute. There we go. Sorry, just a second. This was the, yeah, so this was the area of entry. I do apologize about the confusion, because I was like trying to remember exactly where it was. So this is where the market broke structure. So this was the imbalance of general area of interest, and then price. So because it was a 15 minutes break of market structure as well. So general idea was for price to have traded into that AOI, and then to have given obviously a break of market structure to the downside, which it did right there. Now, of course, this is a classical break of market structure. So again, remember these two candles are essentially the same, right? So you could have decided to have gone short within this general area. Okay. So again, just waiting for price to have traded out of there. So short opportunity right here. And then stop loss going 5 pips above the high. And then first profit targets, there's two different areas one could aim for, but daily SST below is a very nice place to aim for, because of course it's a 15 minutes move to the downside. Now, what we did see, of course, price traded into optimal area of entry before giving a bearish run to the downside. Okay, so that was on Wednesday. So Wednesday was a 15 minutes as well as a 5 minutes BRR. Right, so now let's take a look on Thursday. So going into Thursday, now the 4-hour time frame had shown us two bearish expansions to the downside. So bearish is still the better direction. So just before the European Open, you can see that the next drawn buy side on the 1 hour is the swing high, and the next drawn sell side is this imbalance down here, right? So bearish is still the better direction. Now going down to the 1 hour time frame. So again, just to forward play this once. I'm just going to move this along as well. So we have your European Open, and we have your London Open. Next drawn buy side liquidity is this imbalance. And of course, the next drawn sell side liquidity is this imbalance down here. And what we can see is the price is giving us a bearish expansion to the downside. So again, just generally, short was the better bias. But one thing to bear in mind was that obviously was the BOE interest rate decision at 7 a.m. New York time. And of course, there was Fed chair as well taking place later on that day. So the two major red news events to have been aware of that day. Now, if we go down to the 15 minutes time frame, what we can see, so again, if I just forward play this, we can see that price had obviously delivered on initial high, initial low, giving us a bearish break outside of the Asian range. So in this case, for me, my AOI, my area of interest, was for price to have essentially traded into this bearish order block. Okay, so what we can see is that just before the London Open, price failed to retest the order block. So generally there was no setup until price trades into another block, which it did later on. So for me, what I was anticipating in line with the setup, in line with a bias, was a BRC to the downside. An alternative bias to have obviously looked for was a BRR, because if you take a look and see when price traded into that bullish order block, what we can see happen is, of course, this is our initial low, right? So if I just move this, you can see this is the initial low. This is an intermediate high, higher low, and then a bullish expansion. And then in that bullish expansion, we have obviously an imbalance, making this a secondary break of market structure. So in this case, you could have also treated this as a 5 minutes, because the 5 minutes break of market structure right there. Okay, so essentially what you would have needed to have waited for is for either price to have traded into this imbalance, but considering this imbalance is just generally unmitigated, that would have been an optimal area to have looked for an entry to go have gone long. Right, so we can see the price traded, although they traded into this general area, didn't really trade into that imbalance. Okay, so there wouldn't have been any opportunity to have gone long from there. Another thing one could have looked for, because again, like I mentioned, BRC was another possibility to have traded with the setup. So as soon as price obviously took out the high of the order block and the Asian range, you would have needed to have looked for a break of market structure, but that didn't happen. So this would have been the first instance to have identified a break of market structure. There wasn't any, but then price then proceeded to take away trade above the high of the order block, making this a 15 minutes break of market structure. So in this case, the best consideration is after price had aggressively traded above the Asian range, right? The best consideration is to have seen this as a classical break of market structure. Now, of course, an AOI in this case would have been the breaker. So the breaker would have been right here. So again, just to look for that entry opportunity, would have needed for price to trade into our AOI, which is that 15 minutes breaker. And essentially it failed to do that, right? So price failed to trade into that 15 minutes breaker. Before, obviously, we had, oh, this is now going too fast. Right, so price failed to trade into that 15 minutes breakout where we would have been looking for obviously an entry confirmation, right? Because if it had traded into that 15 minutes breakout, then obviously what we would have looked for is a 1 minute break of market structure to the upside, and we would have looked to have gone long. But there wasn't any opportunity to trade in line with that. So obviously when the interest rate decision kicked in, what we did see was a massive shift to the upside, taking out buy side before eventually price obviously came down. But this is obviously outside of our trading hours, so there wouldn't have been any need to have engaged in any kind of trading after the Bank of England interest rate decision. Now, let's finally go into a Friday session. So we're seeing 2 sessions of drop to the downside, a session of contraction, a third session of drop to the downside. Bearish is still the ideal bias. On the daily, we now have a new drawn sell side, which is the swing low, and a drawn buy side stays the same. Now going on to the 4-hour time frame, we can see that price had obviously delivered on the next draw or next draw on buy side, which is a swing high, and the next draw on sell side, which is a swing low down here. 4-hour bias is still 2 bearish expansions to the downside. However, obviously this candle is closed outside of this range, so we're now moving into that third bearish expansive part of the cycle. So going on to the 1-hour time frame, we can see very clearly that price of just forward play. You can see that obviously price has delivered this initial third push expansion, contracted, lower low, but all of this is essentially one massive accumulatory range. So although I was bearish, the bias was bearish, the bigger picture was that this was a massive accumulatory range. Now, H1 bias, of course, Next draw on buy side is this imbalance. Next draw on sell side is the swing low down here. So going on to the 15 minutes time frame, we're now looking for obviously some kind of move outside of the Asian range before the London Open. So what we can see is going to get rid of is we can see the price. Oh, let's get rid of that. There we go. So London Open, we can see the price obviously took out, traded, gave us a bullish break outside of the range, traded into the order block. Now, if you take a look at the 5 minutes time frame, what we can see is that this is a break of market structure on the 5 minutes time frame. So optimally, what I'm now looking for is for price to trade into my AOI, so area of interest, which is that 5 minutes imbalance, and then from there, break of market structure, right there. Right now that we have a break of market structure, obviously AOI is to take an entry at the breaker. You want to place your stop loss 5 pips above the high. You could even get a really good entry near the last up close candle as well. But this is the setup, right? And then optimally you want to have your first profit target either at the recent low right there, and then your second profit target at the H4 SST just residing below it. So what we can see again, you can see the price traded right into our entry at the breaker, triggered our entry, and then proceeded to take out both the first and the second profit target before trading back into the range. So it's a very simple example of a 5 minutes BRR. Okay. So that sums up all the setups that took place last week. So we did have obviously some days where there was no opportunity, but we had days like Wednesday, Tuesday, and obviously Friday, as well as if you were obviously paying attention Monday, where we did have setups, and essentially you could have definitely nailed a nice entry to have gotten a 1 to 2, 1 to 3, 1 to 4, 1 to 5 on these setups. But that's it for me for today. I hope you can obviously reflect back on this week and take some lessons on how you could have traded better and setups that you could have caught that you might have missed, and apply this for the coming week ahead. So thanks for watching, and I'm wishing you a fantastic trading week ahead.